ATI Inc., ticker ATI, absolutely beat consensus estimates this quarter.
Yeah, they really did. I mean, adjusted EPS came in at $1.23, which just crushed the consensus of $1.02 to $1.04.
And revenue hit $1.26 billion. That's up 10.6% year over year.
Right, easily beating the $1.22 billion estimate.
Plus, management raised the full year 2026 guidance significantly.
They bumped adjusted EBITDA to a range of $1.135 billion to $1.185 billion.
And pushed full year EPS to $4 to $5.18.
Well, stock reaction was just immediate.
Yeah, shares spiked over 14% to hit a new 52-week high of $239.23.
Capping off this massive 10-day winning streak, right?
Exactly. It added over $7 billion to the company's market cap, pushing it to around $31 billion.
Which is wild. So that massive beat in the guidance raise really requires us to, look under the hood.
To see where this profitability is actually coming from.
Exactly, which leads directly to the segment breakdown. The standout here is definitely their Advanced Alloys and Solutions segment, or AANS.
Right, because AANS sales hit $624 million. It's up 17% year over year.
Yeah, but the real story there is the margin. The segment's EBITDA margin hit an all-time high of 23.7%.
Wow.
That's up 930 basis points from the prior year.
Okay, wait, I have to push back on this record margin thing for a second.
Sure, what are you seeing?
Well, looking at the footnotes, there's a highly convenient $9.9 million gain from a closed facility sale included in that number.
Ah, the real estate sale.
Yeah. So, I mean, is this segment actually a newly durable cash cow, or is it just a cyclical business wearing a one-time real estate disguise?
It's a fair question, but even if you strip out that asset sale entirely, which gave them about 160 basis point benefit, you're still looking at massive growth.
Okay, so the core margin is still expanding.
Yeah, the core margin expansion is very real. It's driven by portfolio optimization, higher pricing for exotic alloys, and them just exiting lower margin product lines.
So they're just getting rid of the stuff that doesn't make money.
Exactly. But then if you look at the high performance materials and components segment, HPMC, it's a slightly different story.
Right. Sales were $637.1 million, so up 5%.
But the margins actually dipped slightly sequentially from Q1.
They went from 24.9% down to 24.1%, right?
Yeah, and management explained that this was due to qualification timing and manufacturing costs tied to a New Mexico facility.
Oh, and they had that new titanium electron beam furnace, right?
Right, exactly. So they're absorbing those costs right now.
Got it. So understanding why ATI has the pricing power to drive these overall margins really requires looking at exactly who is buying their products.
Yeah, and that brings us to the aerospace and defense boom.
Aerospace and defense now makes up 68% of ATI's total revenue.
Which is a huge chunk. And within the AANS segment alone, there was a staggering 90% year-over-year increase in defense sales.
90%. That is just insane.
It really is. Plus, management reported a record backlog of $4.4 billion.
Up 18% year over year.
Right, which provides them with massive visibility into future revenue.
And that explains the management commentary. CEO Kimberly Fields and CFO James Foster said Q4 is expected to be the strongest quarter of the year.
Yeah, with an implied annualized EBITDA exit rate of $1.35 billion.
You know, it sounds like ATI is operating less like a traditional metals manufacturer and, I don't know, more like a Tier 1 defense contractor with an impenetrable moat.
Honestly, that's exactly what they look like right now.
Like, they are one of only 3 qualified Western producers of high-purity hafnium and zirconium.
Right.
How does that unique position cement this huge advantage they have?
Well, those materials are absolutely critical for defense, especially in nuclear applications like submarines.
Oh, okay.
And defense contractors are mandated to use allied supply chains. They literally can't buy this stuff from geopolitical rivals.
So if there are only 3 Western producers, ATI basically holds all the cards.
Exactly. They have total pricing power.
But, you know, with record backlogs and surging margins, the narrative sounds totally flawless.
Until you look at the valuation.
Right. The market data and insider behavior paint a potentially conflicting picture that retail investors really need to weigh.
Yeah, the valuation disconnect is real. You have to break down the fundamentals versus this massive momentum.
Because ATI is trading at a PE multiple of roughly 66 to 74.
Which is an enormous premium when you consider the S&P 500 median is only 23.6.
Wow, yeah. And furthermore, ATI's trailing 12-month revenue growth of 4.6% actually trails the broader market's 8.3%.
So you're paying a huge premium for a company that isn't growing its top line as fast as the average market.
Right, which brings up a really notable red flag.
And insider selling.
Yeah, insiders have been aggressively taking profits.
They really have. Over the last 90 days, executives sold over 152,000 shares.
Which is worth approximately $28.2 million.
And that includes CEO Kimberly Fields.
Right. So if the CEO is trimming her position by like 20% right as the stock hits an all-time high, you have to ask yourself a hard question.
Definitely.
Shouldn't retail investors treat this 10-day momentum streak as a prompt to reevaluate rather than just blindly buy in?
I mean, I would. When insiders are cashing out at record highs, caution is definitely warranted.
Right. But I want to leave you with the final thought on global supply chain leverage.
Okay, what are you thinking?
Well, while standard financial metrics show a highly overvalued stock, ATI's near monopoly on these critical, high-purity materials for nuclear and aerospace might mean traditional PE ratios are just failing.
Failing to capture the strategic premium, you mean?
Yeah, the premium of Western-based supply chains in an increasingly fractured world.
That makes a lot of sense.
Will scarcity permanently alter how we value industrial materials companies?
It's a great question.
Follow the show for daily earnings coverage.